Exercise 5.8 is a story about a hospital, and it just screams, bring on the T accounts. So let's take a look. It tells us the hospital has the following balances at the end of the year, before any adjustment. Accounts receivable has a debit balance of $60,000. They mustn't be a very big hospital if their accounts receivable at the end of the year is a total of $60,000. Then they tell us that their allowance for uncollectible accounts has an $1,100 credit balance. So that's uncollectibles that's an allowance. So that has an $1,100 credit balance. And then they tell us at the end of the year they estimate uncollectible accounts to be 15% of accounts receivable. That's what they want there. Well, $60,000 times 15% is $9,000. That's all the facts that they've given us. They want us to now compute the bad debt expense and the year-end closing entry. So we need to compute bad debt expense. So we'll have a debit to bad debt expense, an income statement account, and a credit to a balance sheet account. And while we're here, might as well remind you that accounts receivable is also a balance sheet account. Please remember, in my class, BS stands for balance sheet. Okay, here's what they're asking you to do. What is that number? What number do we have to add to 1,100 to come up to 9,000? 1,100 plus X equals 9,000. X equals 9,000 minus 1,100. X is 7,900. And that's what we need. So we need to debit bad debt expense, 7,900, credit allowance for doubtful accounts, 7,900. Now all the information they're giving us is on the balance sheet accounts. They tell us that they're basing their estimate on a percentage of receivables. That tells us it's a balance sheet approach. And when you see the balance sheet approach, you know you have to balance the balance in the allowance account. So we have the number we need right here. Now that we've done all the math, now we can do the accounting. So we have bad debt expense, 7,900. Allowance for uncollectibles, 7,900. That's 15% of accounts receivable minus the 1,100 we already had. Is what we need for this year. Now, the second requirement I kind of gave away when I reminded you that this was a balance sheet account and this was an income statement account and this was a balance sheet account, because the next requirement says, how would this show in the income statement? That's the income statement account, and that would be $7,900. How would this show in the balance sheet account? That would be the full 9,000. 7,900 bad debt expense, 9,000 allowance for doubtful accounts. And then the last part of this, it says, please show us accounts receivable at net realizable value. This is, please show us accounts receivable in the legally acceptable fashion. So, our total accounts receivable, that number, $60,000. Our allowance for uncollectible accounts, $9,000. Our net realizable value is $51,000. So we're telling people who use our financial statements, altogether we have $60,000 in receivables. We expect not to collect 9,000 of them. So the total value of our accounts receivable is really $51,000. Accounts receivable at net realizable value.